Hello and welcome to CMC Markets on Tuesday the 23rd of July and the weekly market update. And it's been a fairly quiet week this week, certainly in terms of economic data. We're still seeing record highs on the S&P 500, yet we're still seeing middling to fairly average US economic data. FTSE 100 is back above 6,600, but it's finding progress extremely difficult, as are the rest of Europe's markets, though peripheral markets are actually doing slightly better. Even so, the economic data is doing anything but slightly better. If anything, it's getting slightly worse. If it can get any worse, it is. So what are we going to look at this week? Well, given the fact that it's UK second quarter GDP this week, and given the fact, now I'm going to say it, I wanted to make this a royal baby free zone, but I'm going to say it. We've had a royal baby. We're going to talk about the pound against the dollar, and for those of you out there, there has been no discernible impact on the pound because of the royal baby. Let's get that clear right now. Moving swiftly on, looking at Thursday's Q2 GDP numbers, and we're expecting a fairly good number from Thursday, and I think front running that, we've seen a significant uptick in the pound against the dollar and the pound against the euro. And I'm going to look at the key chart points on the cable, and I'm going to look at the key chart points on euro sterling. And given that it's quite a big earnings week this week, I'm also going to have a look at Apple's share price and look at the key levels on that as well. Okay, so let's start with the pound against the dollar, and we have broken above the 153 level on the daily chart, and really, it's not too much of a surprise. I talked last week about a bearish engulfing week on the US dollar index. And the US dollar index includes the pound, and it includes the euro, and it includes the dollar yen price. So we were expecting to see some dollar weakness. What we're also seeing is some sterling strength. And I think that's largely as a result of last week's minutes from the Bank of England, where all policymakers basically voted for no further QE going forward. Now that picture could change over the next 5 to 6 weeks at the August meeting. So I think it's important not to get too complacent about the current sterling strength. And there is also the fact that Q2 GDP on Thursday could well disappoint. Expectations are fairly high for a figure of round about 0.6. The key level on the cable, on the chart that I'm putting up now, is on the daily chart, and I'm looking at 157.50 move to the 148 lows, and the pullback is at 153.95. It's a 61.8% Fibonacci retracement of that entire down move that we've seen over the past few weeks. That's really the key level going forward. And we also need to remember that next week we've got a whole plethora of US economic data that could determine when and where we get the US or the Federal Reserve taper, because Bernanke's rhetoric over the past week or so has been an awful lot more dovish than expected, and that's caused a little bit of profit taking and all the dollar bullishness, and that has obviously benefited the pound. It's also benefited the euro as well. Key question really is, can that be sustained going forward? If we break above 154, I think that's really the key level on the top side, then we could go to 155.30. But we need to hold above the 50 and 100-day moving averages, again on the daily chart, and that comes in round about the 152 area, as well as a significant area of support around about 151.60. Moving on to euro sterling, a similar sort of bullish scenario is unfolding on the euro sterling. We saw a bearish engulfing day on the daily candle chart last week. Now, given the fact that we've seen a significant slow rise higher over the course of the past few weeks, that bearish candle is significant. Having failed to get above 87, what we need to see now is a break below the 85, 70, 80 level, as shown by this line that I've drawn on this daily chart, to really open up the lows around about 85.20 and the trend line support that currently comes in from the lows in the beginning of May. So trend line support coming in from the beginning of May on the chart there currently comes in around about 85.20. looking for pullbacks to really run out of steam around about 86.30-40 area. Given the fact that we saw this bearish daily candle, it would be a surprise if we saw a significant bounce back in euro sterling, given the fact that we are expecting some fairly disappointing French PMI data and German PMI data on Wednesday, the day before the UK GDP. There's certainly nothing to get overly enthusiastic about economic data-wise from the euro area. So let's finish up this week's look at the markets by looking at the Apple share price. Now, we are expecting the latest earnings report from Apple later this evening. Now, expectations are for earnings per share of around about $7 a share. Now, if you look at that in the context of a year ago, that's a significant decline, because this time last year we were looking at $10 a share in terms of earnings. In terms of revenues, we're expecting $35 billion. Well, you know, that's an awful lot of revenue in anybody's money, but it's all about expectations with Apple. Expectations have been ratcheted down. I think the key question that investors will be looking for from the earnings report tonight is the product pipeline. There's been an awful lot of chatter about the fact that they're getting squeezed by Samsung. You know, what new products have they got coming up in the pipeline? Will Tim Cook outline a pathway for maybe a cheaper iPhone for the Chinese market, perhaps? A new iPhone, an iPhone 6, an iPad Maxi. That's what I'm going to call it anyway. Basically an iPad with a bigger screen. There's been an awful lot of talk about the fact that Apple has been talking to its suppliers about a bigger screen for the iPad, a 13-inch screen. So there's an awful lot riding on this particular earnings report that we've got coming out tonight. So it's not just about earnings expectations and the actual core headline numbers. It's, no pun intended there, core headline numbers. Did you like that, Apple? Anyway, it's not just about that. It's also about the product cycle. So keep an eye on the key lows that I've identified on this chart around about $390 to $400. It's also the 200-week moving average. I've also drawn a trend line through the highs, and what we need to do is any pullback in the Apple shares really needs to hold above that horizontal line that I've drawn through the lows around about 390, 400 and the 200-week moving average. If we manage to hold above that key support level, then the prognosis remains fairly positive for Apple's share price. Really need to see how it pans out, but certainly looking for a move higher in the short to medium term. So that's pretty much it for this week. Thanks very much again for listening. This is Michael Hewson talking to you from CMC Markets.